In January 2026, Nvidia stands as the world's most valuable company with a market capitalization exceeding $4.5 trillion. So as a figure that dwarfs the economies of most nations. This Silicon Valley giant, once a modest startup focused on gaming graphics, now powers the global artificial intelligence revolution through its dominant GPUs. Yet beneath this triumph lies a shifting landscape where billionaire investors are quietly reallocating billions, moving capital away from high-flying software plays like Palantir toward Nvidia's hardware empire. The stakes could not be higher. Artificial intelligence demands unprecedented computing power, and Nvidia controls over 90% of the market for the AXE-CL accelerators that train and run the world's most advanced models. As hyperscalers pour hundreds of billions into data centers, Nvidia's order backlog stretches into the hundreds of billions, signaling sustained demand through 2026 and beyond. Meanwhile, competitors circle and questions arise about whether the AI spending frenzy can endure without pause. At the heart of this story is a pivotal choice facing investors. Prominent hedge funds and billionaires, including figures like Chris Rokos, have sold substantial Palantir holdings in recent quarters to load up on Nvidia shares. This rotation reflects a growing conviction that hardware infrastructure, not just software applications, will capture the lion's share of AI's economic value in the coming years. Nvidia's ascent has been meteoric, briefly surpassing $5 trillion in market value during 2025 before settling into its current range. Its data center revenue alone reached tens of billions per quarter, driven by insatiable demand from cloud giants like Microsoft, Amazon, and Google. Palantir, while posting impressive growth in its AI platform, trades at valuations that imply near perfection, leaving little room for error. The central tension is clear. In an era where AI is reshaping industries from healthcare to autonomous vehicles, who will own the foundational layer? Nvidia's chips are the indispensable pickaxes in this digital gold rush, embedded in nearly every major AI system worldwide. As 2026 unfolds, the decisions made by institutional investors today could determine which company emerges as the enduring powerhouse. This is not merely a tale of stock performance, but of technological dominance. Nvidia's grip on AI hardware has created a moat reinforced by its CUDA software ecosystem, making switching costs prohibitive for developers and enterprises. The question now is whether this empire can withstand intensifying competition and sustain its extraordinary growth trajectory. In April 1993, 3 engineers gathered in a Denny's diner in California to sketch out a bold vision on napkins. Jensen Huang, Chris Malachowski, and Curtis Preem founded Nvidia with just $40,000, aiming to revolutionize 3D graphics for the emerging PC gaming market. Huang, a 30-year-old electrical engineer from Stanford with prior experience at AMD and LSI Logic, became CEO and has led the company ever since. Nvidia's early years focused on graphics processing units, or GPUs, starting with the 1999 launch of the GeForce 256, the world's first GPU. This innovation transformed PC gaming and multimedia, establishing Nvidia as a leader in visual computing. By the mid-2000s, researchers began recognizing GPU's potential for parallel processing beyond graphics, particularly in scientific simulations and emerging machine learning tasks. A pivotal shift occurred in 2006 when Nvidia released CUDA, a parallel computing platform that allowed developers to harness GPU power for general-purpose computing. This software ecosystem, built over nearly 2 decades, became Nvidia's enduring advantage, enabling efficient AI model training as deep learning surged in the 2010s. In 2012, the breakthrough AlexNet neural network, powered by Nvidia GPUs, demonstrated superior performance and accelerated the company's pivot toward artificial intelligence. Meanwhile, in 2003, Peter Thiel, fresh from selling PayPal, co-founded Palantir Technologies with Alex Karp, Stephen Cohen, Joe Lonsdale, and Nathan Gettings. Inspired by PayPal's fraud detection systems, they aimed to adapt similar analytics for counterterrorism while protecting civil liberties. Early funding came largely from Thiel and a $2 million investment from the CIA's venture arm, In-Q-Tel. Palantir's initial focus was government contracts, developing platforms like Gotham for intelligence agencies to integrate and analyze vast data sets. Karp, a philosopher with a PhD in social theory, became CEO in 2004, bringing an unconventional approach to leading the secretive firm. Over time, Palantir expanded into commercial sectors, launching Foundry for enterprise data integration. The paths of Nvidia and Palantir converged in the AI era. Nvidia's hardware dominant supplied the compute power for advanced models, while Palantir's software layered analytics and decision-making tools on top. By the early 2020s, institutional investors began viewing Nvidia as the foundational enabler of AI infrastructure, setting the stage for capital rotations away from pure software plays. Nvidia's dominance in artificial intelligence stems from its unparalleled control of the hardware layer that powers the entire ecosystem. The company's GPUs, particularly the Blackwell and upcoming Rubin architectures, deliver the parallel processing capability essential for training massive neural networks and running inference at scale. In the third quarter of fiscal 2026, Nvidia reported $51.2 billion in data center revenue, representing nearly 90% of its total sales and underscoring how AI infrastructure has become the core of its business. The mechanism creating this empire is Nvidia's integrated stack, advanced chips combined with the CUDA software platform developed over nearly 2 decades. CUDA locks in developers and enterprises as rewriting code for alternative hardware proves costly and time-intensive. This network effect has sustained Nvidia's market share above 90% in AI accelerators, even as competitors like AMD introduce capable alternatives. Palantir, by contrast, operates at the software layer, providing platforms like Foundry and its AI-enabled extensions. He had integrate and analyze data for enterprises and governments. While Palantir has achieved impressive growth through commercial expansion, its valuation reflects expectations of flawless execution in a competitive analytics space. Investors recognize that software, though recurring, sits atop hardware foundations controlled by Nvidia. The capital rotation observed in late 2025 exemplifies this shift in perception. Hedge funds managed by billionaires such as Chris Rokos and others from Renaissance Technologies fully exited Palantir positions while increasing Nvidia holdings substantially. This move prioritizes the foundational hardware provider, seen as capturing a larger portion of the AI value chain amid projected $400 billion in hyperscaler capital expenditures for 2026. Consequences extend beyond stock performance to broader economic implications. Nvidia's order backlog, extending into hundreds of billions for Blackwell and Rubin systems, signals sustained demand from cloud providers and sovereign AI initiatives worldwide. As major customers like Microsoft, Amazon, and Meta allocate massive budgets to data centers, Nvidia benefits directly, fueling revenue growth projected to exceed $200 billion annually. Yet this concentration raises questions about dependency. Enterprises building AI capabilities increasingly rely on Nvidia's roadmap, from energy-efficient designs addressing power constraints to full rack-scale systems. Palantir's strengths in deployment and decision-making tools complement this hardware, but the primary economic leverage resides with the chip supplier. the profound revelation emerges from the patterns of institutional capital flows. In the architecture of artificial intelligence, true dominance resides not in the applications, but in the underlying infrastructure that enables them all. Billionaires and hedge funds recognize that Nvidia's control over AI hardware creates an unassailable position, as evidenced by moves in late 2025, where managers like Chris Rokos entirely liquidated Palantir stakes to amplify Nvidia exposure. This strategic pivot underscores a broader truth that while software like Palantir's platforms democratizes data insights, the hardware layer dictates the pace and scale of innovation. Recent disclosures from 13F filings illuminate this shift with stark clarity. Renaissance Technologies, under the legacy of Jim Simons, reduced Palantir holdings while substantially increasing Nvidia positions, reflecting a calculated bet on sustained AI infrastructure demand. Similarly, despite some contrarian sales by figures like Stanley Druckenmiller from both stocks, the net rotation favors Nvidia as the foundational powerhouse amid projections of $1 trillion in cumulative AI capital spending through 2030. These maneuver as reshape power structures within the technology sector. Nvidia's $4.5 trillion market capitalization in early 2026 not only eclipses rivals, but also grants it influence over global supply chains, from semiconductor fabrication in Taiwan to data center expansions across North America and Europe. Governments and corporations alike depend on Nvidia's roadmap, embedding its technology in national AI strategies and enterprise transformations. The implications for 2026 and beyond are transformative. As AI permeates critical industries, Nvidia's empire fortifies economic dependencies, potentially accelerating wealth concentration among those controlling compute resources. Palantir, valued at over $400 billion with its 135% stock surge in 2025, remains a vital player in analytics, yet its growth trajectory hinges on the hardware ecosystem Nvidia commands. In conclusion, this billionaire exodus from Palantir toward Nvidia signals a maturation in AI investment, prioritizing enduring moats over speculative applications. The empire Jensen Huang built from a diner napkin sketch now stands as the bedrock of the digital age, promising sustained dominance as long as computing demands escalate. For investors and observers, the lesson is indelible. In the race for AI supremacy, the foundations always prevail.